Okay, I recovered most of the lost ground, just 10 points off for the Nifty. The global markets are supportive. Europe is firmly in the green, so that is probably aiding sentiment as well. 5218 for the index. Good time to get in Sandeep Wagle's recommendations. He joins us right now on the show. Okay, we'll just get in a moment from now. I was just looking at what has really pulled the index up. It's not so much of a lot of stocks going up. Of course, Reliance and ONGC are two heavyweights which have done very well. ONGC is up 1.5% and Reliance is up 1%. But also a few stocks which had lost a lot of ground have bounced up. So the likes of Hindalco, Tata Steel are no longer the 2.5%, 3% down. They're down about 1.5% odd. Sandeep, what is it that you're recommending in trade?
Neeraj, a buy in On Mobile, stop loss 3880, target 45. A buy in Wipro, stop loss 336, target 360. A buy in Ranbaxy, stop loss 503, target 530. And a sell in Hindalco, stop loss 118.50, target 112.
All right, Sandeep. Many thanks for joining us and giving us those quick ideas. Devin, come to you. Give us a sense on what you would do with the paints business now. I mean, Berger Paints came out with numbers. You've already seen a fair year-to-date performance from both Berger and Asian Paints. Within the construction pocket, this would be an ancillary. What would be your approach here?
Well, once again, I think given the kind of valuation at which I think the companies are quoting currently, I'm not finding very high comfort at this point of time to once again push into or buy into these companies. Maybe I think again I'm repeating the same point which I talked about while talking on the Sun TV result, that there are many opportunities where I think you have deep discount, I think valuations available, and those companies would be I think far more clearer for appreciation. I'm not trying to say that the consumption story in the paint business is over. I'm trying to say that I think this particular business would probably I think may relatively move slower compared to the rest of the other valuations which are available into the market. So my eye and the preference would be on those stocks where I see the valuation advantage coming in my favor. My simple calculation is that if I get the appreciation of 30% CAGR, then I should buy into that company. I think that is where I find many other companies available in the list.
I mean, I'm just extrapolating from what you're saying. Would Mahindra Satyam be an opportunity of the kind that you're recommending, and which are the other deep discount stocks that you're evaluating in this market?
Well, Mahindra Satyam has certainly I think turned around as far as the results are concerned, and certainly I think the numbers are far more impressive. At the same time, I think the focus largely towards I think winning the contracts with the higher margins I think is also there. So it gives a relatively higher amount of comfort than what it used to be earlier period of time. But whether the focus would be on IT at this point of time, the answer is no. Maybe I think the focus would be largely remaining with some of the banking and the infrastructure banking companies, where I see I think in near 3 to 6 months time a good amount of traction happening because of I think the initiatives taken by the government PMO for allowing some of the infrastructure project to get started. So when the jam wheels are actually running freely, at some point of time I think you would find that higher growth would come in the banking space, NBFC infrastructure companies, and that's where I think you could possibly buy companies with 1 time, 1.5 times price to book value, or even 1.7 time price to book value. So many of the banks like ICICI Bank would remain in a choice list, SBI would remain in the choice list, IDFC and REC kind of company would remain in the buying list. So certainly I think these are the companies where I believe that 40-50% kind of an up move should be possible in a market when it starts assuming normalcy. So I would think that I think this would be a better choice to add into the portfolio.
Are you buying distressed, Devin? I mean, just before we let you go, are you buying any distressed names which might be available at deep discounts?
I don't know. I think there are some of the companies, their valuations look interesting, but still we have not started buying into them. We are still looking at the margin of safety, and I think we find that some of the proven names are available at a better valuation. One of the companies which comes into immediate focus I think is Sterlite Technology, with a turnaround result in the last quarter, and promises to be I think better result going forward because of the higher order release from the power grid side on aluminum conductor business. So I think Sterlite Technology could be I think one good company which one could possibly buy with an idea of getting 50% plus kind of appreciation over a 12-month period, 12 months time.
All right. I'm also looking at stocks such as Geometric Software, which have shown good traction recently, and Agrotech Foods, given the agri-related businesses being in focus, and Dishman Pharmaceuticals. Any of these three names that you like, Devin?
I think within the pharmaceutical space, I think certainly two companies which we would like to put across, I think which we are also having in portfolio and we recommend them for investment purpose, that's a disclosure. The Glenmark and the Cipla, both these companies we like for buying into the portfolio. Cipla, because of the higher amount of ANDA pipeline that they have and the better amount of, or rather I think increased capacities that they have developed in the formulation segments, would promise I think higher amount of performance on a consistent basis. So Cipla certainly looks I think very interesting. Of course the last quarter result has actually validated the viewpoint that I have just now talked about. At the same time, I think in case of Glenmark, I think which has shown without in-licensing income, I think a better performance on the operating side could possibly, I think, grow faster. With the correction in the debt portfolio in this particular year, I would think that the performance of Glenmark would be far more better than earlier years. And in-licensing income, when it starts happening in this year, it would add to the profits of the company. So these two companies in the pharma space, we would like to put across in the portfolio, further into the portfolio and add into the portfolio.
Great, Deven, stay on. Lots more to talk about as well. Let's get in one more voice. Ashu Madan joins us right now with his view of what's really happening in the markets right now. In fact, we haven't even asked Deven about what is he doing for the larger markets, so get that view going as well. But Ashu, that question to you, a couple of moves have happened. You've been very bearish in the last 3 or 4 times that we've interacted. There finally have been a couple of moves that have been done from the PMO side as well, which probably hint towards some policy paralysis ending. Does that enthuse you? Are you a buyer into the markets, or are you still circumspect?
Yes, I'm a trading buyer in the market currently. See what has happened. The only thing which has changed as per me is that last couple of months, whenever there was an event, whether it was election, whether it was RBI policy, budget, EU meet, Greece, everything. I mean, we all went with a lot of expectations, and I think that is where the disappointment happened. But post this expiry, when I think the overbought positions were clearly being squared off, and the way we opened gapped up next morning clearly showed. I mean, we could witness that now. I mean that the trough. I mean, it's not a right word to use currently with such a thin market position. Still, we are using the word froth. But whatever the position, the limited setup of the positions also, that froth was over. So the trading bounce was available. And this time, I think the best thing which has happened, which as per me was that nobody went into RBI meet with any expectation. Nobody went into EU meet with any expectation. On the contrary, the position as I see from the outside, our people are at every up move, people are going short in the market. So I think as long as that phenomena stays, so I'm positive on the market, but only in the index and index-based couple of stocks. So because that will play. Otherwise, if you look at the overall market, I mean, after one move, the broader market is still taking a breather. But at current levels, I think for short to medium term, or probably for the next few days or the expiry till the time this technical situation remains as it is, I would be buyer at dips. Like today was a good opportunity, or any kind of such move where you'll see this bounce back coming in the immediate future for the broader market.
Ashu, what about Reliance Industries? That's seeing some traction, the best series move that it has had till now.
Absolutely. After months and months of underperformance, I've been on record saying everyone that if somebody wants to, I mean, generally people have been talking about that this is a stock pickers market. I still don't believe this is a stock picker market, but because to identify a sector and or a model portfolio in this kind of a market is very difficult. But yes, Reliance is showing a lot of strength, and in the past 4-5 weeks, at every dip, if somebody is not comfortable, because every client or every trader is not comfortable trading into Nifty or index option, I'm only recommending Reliance. The kind of strength it is showing, the screen is showing that the era of underperformance is over, and probably in times to come, Reliance will outperform the market.
I'll tell you what, Deven Choksi, when spoke to us on the day of the Reliance results, mentioned this, that maybe there could be a bit of a pop, but maybe the days of underperformance are over. Deven, you would be heartened by the fact that Reliance is finally making an up move, but the question really is, I mean, yes, there are a couple of conversations that are happening between Reliance and the government, they're given deadlines, so on and so forth. But post the results, nothing dramatic has happened on the fundamental side. What explains this move, and you think can this go higher for Reliance in particular?
To my mind, and as I gather, I think some amount of information also, there is a positive incline towards resolving the row between the oil ministry and the Reliance, and KGD6 capex approval could possibly, I think, be given in a shorter period of time. That is the first take that I am getting. And going closer to the next year, where I think the market price driven gas price will come to them, I think that means that I think Reliance stock, I think which was derated up till now, could possibly start assuming the kind of a stability and once again I think get into some amount of upside going forward. Though it is given that in this financial year the results won't change materially because of I think the various factors that we have discussed earlier, but my reading says that I think if you get the clarity on KGD6 capex approval and the price revision, then in this case I think the stock would possibly re-rate, and that's where I think one will have to pay and look at I think all the possibilities on. So it is clearly a buy. According to me, I once again repeat, the worst is already factored, is probably over in the price and it is factored in the price. Maybe I think one will have to buy with a relatively 12 to 15 months horizon, if not more, into this particular stock to get their advantage.
Let's start the series that Reliance has had in a really long time. Mind you, our experts also, the technical experts are bullish. Both our fundamental guests recommending a buy on Reliance as well. But I need to take a quick detour while the index is holding out at 5200 and get in Poonam for a quick sense of the top volume buzzers in trade. Some stocks which have had unusually high volumes today. Poonam.
Well, Neeraj, we have Oracle Financial, Jet Air India as well as Berger Paints on very high volumes today. On Oracle Financial, 6.3 lakh shares have been traded so far, which is 13.7 times the 2 weeks average. These are the highest volumes seen in this counter since Feb of this year, and the stock is of course trading above all DMA. The stock is also hit a 52-week high, and it's back on the profit. The volumes are of course high on the back of very good profits, above expectations profits from the street. Next is Jet Air India, 69.3 lakh shares have been traded, 3.3 times is the volumes on a 2-week average. Again, highest volume seen in this counter since Feb of this year. Stock is trading above all DMA, and the company has posted operating profits after at least 4 quarters of losses. So good going for Jet Air India. Berger Paints, 23.3 lakh shares have been traded, volumes are 11.5 times the 2-week average. Again, the highest volumes are seen in this counter since the entire year, and the stock has spiked above, it was trading a little below 50 DMA, it has spiked above 50 DMA and is now trading above all DMA. Stock has gained on the back of good results posted yesterday, and the company has also announced a few of expansion and buyout plans. Over to you.
Okay, thanks for that, Poonam. That's of course a quick roundup. Jet Airways, Berger Paints as well as Oracle Financial Services, all those 3 stocks are key volume movers in today's market. Devin, you spoke about IT not being on the radar. Even so, I mean, we see sporadic moves in some of the large cap ITs. Wipro has moved in today's session. What's your view on IT broadly and specifically on mid cap IT?
The broader view is that I think most of the Indian IT companies, I think among the frontline companies, they are having a lot of cash in the balance sheet. In particular, I am referring to Infosys. And they have clearly indicated that they want to move towards consulting practices. So to my mind, I think it's a matter of time by which I think they would probably start showing some amount of clarity on how the consulting practices would grow into their portfolios. And that's where I think one would look at, I think, organic and inorganic growth strategies that these companies are adopting. Probably among the frontline stocks, I think if we have to select one with I think relative amount of margin of safety, it could be HCL Technology. I think once again the valuations are favoring at this point of time. The stock is suggesting that it could possibly grow up by 15 to 20% in a 9 to 12 months time. Given the kind of results of 45-46 rupees earning per share in this particular year, possible in this year, in this situation I think I would think that the stock would possibly trade at 13 to 14 times price earning ratio, and there you could see price of 585, 600 kind of levels possible into the stock. Of course, I think the larger part of the business related activities, the application maintenance activity which is larger contributor, but infrastructure management services and engineering services portfolios which are growing faster for this company could definitely I think mean that the stock could possibly get into higher profit base, and that's where I can say that I think 15-20% upside in HCL Tech is relatively more clearer to me.
Okay, United Bank, the PAT just below estimates, 173 crores versus our poll of 206 crores. So that one probably just disappointed a little bit. United Bank is what I'm talking about. The Q1 NII as well, just about okay, but the numbers have disappointed in trade. Okay, Ashub, come in on the rest of the oil and gas pack, because today a lot of them are active. Ken, ONGC has had some very good moves the last 2 or 3 sessions. GAIL hasn't had a bad day.